Hi, welcome to Listen2Riches. Today, we'll be discussing Charlie's Almanack, which can be considered a biographical magazine that introduces the life and key ideas of its protagonist, Charlie Munger. While many people might not be familiar with his name, his partner in crime, so to speak, is none other than the renowned stock market guru, Warren Buffett. Charlie Munger is Warren Buffett's golden counterpart, often referred to as the behind-the-scenes advisor and the ultimate secret weapon. Despite his low profile in the public eye, his wisdom, value, and contributions have been severely underestimated by the world. So, just how remarkable is Charlie Munger? Over the past 4 decades, he and Warren Buffett have jointly built Berkshire Hathaway into a company worth over $300 billion, operating more than 65 businesses, making it the world's most valuable publicly traded company to date. Some calculations suggest that if you had handed $10,000 to Buffett and Munger in 1956, that money would now be worth $270 million, and that's after taxes. Charlie's Almanack is one of Buffett's top 10 recommended books, considered essential for understanding the business world and the essence of success. Business titans like Microsoft's Bill Gates, Disney's CEO Michael Eisner, and Wall Street bond king Bill Gross have also highly praised this book. Charlie's Almanack provides a comprehensive portrait of Charlie Munger, detailing how he achieved enormous success in the business world, his unique way of thinking, his views on business ethics, and his emphasis on lifelong learning, all of which can enlighten each of us. Now, why does this billionaire autobiography modestly call itself Charlie's Almanack? Charlie Munger is anything but poor. In fact, he seems incredibly wealthy. The title pays homage to his idol, Benjamin Franklin. In 1773, Franklin published a widely popular Poor Richard's Almanack under the pseudonym Poor Richard, which contained his own aphorisms, writings, and more. So, when the editor approached Charlie Munger to create a book, he chose to emulate his hero and published Charlie's Almanack. However, if you think this book is merely a fan's imitation of his idol, you're mistaken. Charlie's Almanack is rich in content, spanning over 500 pages. It includes Charlie Munger's life experiences, interviews with family and friends, as well as a wealth of valuable visual materials. Additionally, it contains his important speeches at Berkshire Hathaway, 11 classic speeches, and publicly published articles. Today, we'll divide our discussion into 2 parts. In the first part, we'll delve into Charlie Munger's life experiences. In the second part, we'll focus on the life wisdom that led him to success. The famous philosopher Liang Qichao once said that reading biographies of great individuals can ignite our ambition more effectively than dry theories. The real-life events that happen to these great figures indeed resonate with us more than abstract concepts. Now let's move on to the first part and learn about Charlie Munger's life experiences. On January 1, 1924, Charlie Munger was born in Omaha, Nebraska, USA. He spent his early life in this city before attending college. The 1930s were a challenging period in America, and Omaha was heavily affected by the Great Depression. Young Munger had to do odd jobs and, with the help of relatives and friends, his family survived these difficult times. This experience instilled in him the value of family and financial independence at an early age, shaping his lifelong pursuit of both. Speaking of family, while Munger's parents were not particularly wealthy, they spared no expense when it came to educating him and his siblings. They not only imparted various knowledge early on but also gave them books as Christmas gifts. Munger was incredibly diligent himself, often finishing these books on the same night they were given to him. His parents' encouragement for reading and learning allowed Munger to explore a wide range of knowledge in various fields, making him an exceptional student among his peers. Eventually, he went on to study law at Harvard University. As one of the top graduates of his class, Munger joined the California legal system immediately after graduation, becoming a lawyer. He later founded his own law firm, and several of the projects he oversaw were included in Harvard's curriculum. While his career was thriving, his personal life was tumultuous, to say the least. Munger and his first wife parted ways due to a strained relationship, leaving her in financial hardship, painting her own car for transportation. To make matters worse, their 7-year-old son tragically passed away due to leukemia. For someone who valued family as much as Munger, these setbacks almost broke him. However, Munger didn't give up on himself. His personality, whether in good times or bad, leaned towards actively seeking solutions. For example, after a traffic accident caused him to lose 90% of his vision in one eye, he didn't give in to despair or blame the universe. Instead, he calmly experimented with various reading aids, even considering learning Braille, and actively cooperated with treatment. Surprisingly, his right eye eventually recovered its vision miraculously. After enduring numerous setbacks, Munger met his second wife, Nancy. The two remained together for life, raising 8 children and enjoying a happy and fulfilling life. A few years later, he crossed paths with Warren Buffett and entered the world of investing, founding his own investment company. Compared to practicing law for others, Munger found that this method of acquiring wealth through rational judgment suited him better. Unlike most at the time, Munger had unique ideas about investing. He even invented a system of human misjudgment psychology to correct his own investment beliefs. This psychology is Munger's compilation of common cognitive errors that people make when making decisions. For instance, Munger discovered that the human brain has a tendency to make quick decisions to eliminate doubt, especially in confusing and stressful situations. Therefore, he never allowed himself to make investment decisions under stressful conditions. With this near-absolute rationality, Munger's returns on investments continued to grow. However, in the 1970s, the U.S. stock market entered a frenzy, and Munger's company suffered 2 consecutive years of losses that nearly wiped out the profits of the previous decade. Fortunately, Munger endured the pressure, held onto his stocks, and finally experienced a profitable rebound in the 3rd year. Watching his wealth go on a roller coaster ride, Munger realized that he didn't need to go it alone anymore. So, in 1975, he liquidated his own company and invested the funds into Berkshire Hathaway, becoming Warren Buffett's right-hand man. After their partnership, Charlie Munger had a profound impact on Warren Buffett's investment philosophy. At the time, Buffett was influenced by his mentor, Benjamin Graham, and advocated for investing only in undervalued stocks. This approach was considered an investment gospel and had indeed earned him substantial profits in the early years. However, Munger believed that the kind of undervalued stocks Graham focused on had become scarce, and that owning a great company at a fair price was far superior to owning an average company at a cheap price. Based on Munger's advice, Buffett shifted from the old path of buying cheap to the new strategy of investing in quality businesses. The most famous example is Berkshire Hathaway's continuous purchases of Coca-Cola stock starting in 1980. Coca-Cola was already a mature, high market value company at the time, but on Munger's recommendation, Buffett gradually acquired Coca-Cola stock at a premium price over 3 separate transactions. Today, the appreciation of these stocks has exceeded $15 billion. Buffett once described the ideal partner in his mind: firstly, someone smarter and wiser than you; secondly, someone who won't play Monday morning quarterback or hold grudges when you make a disastrous mistake; thirdly, someone generous, willing to invest their money, and work hard for you without expecting immediate returns. Lastly, this partner should bring you joy along the long and arduous journey. At the time, Charlie Munger was undoubtedly the best, and some would argue the only, choice. Buffett once said of Munger's assistants, "Charlie expanded my intellect. You know, he dragged me along into areas that I might not have ever gone." Surprisingly, despite his status as a superbillionaire, Munger is not obsessed with wealth itself. He and his wife still live in the same house they purchased 40 years ago. He is passionate about philanthropy, serving on the boards of several charitable organizations and donating $60 million to Stanford University's Public Interest Fund. Despite owning a private jet and the world's largest yacht, when he travels, he still chooses economy class. He detests losing touch with the real world due to wealth and does not want to become disconnected from reality. Many envy Munger for his wealth, family, and business partner. To this, Munger once said that the best way to have something is to make oneself worthy of it. As of today, Charlie Munger is in his 90s but continues to work daily and annually presides over several company meetings, sharing his insights with the investment community. In his youth, Munger considered Benjamin Franklin as his lifelong mentor. Interestingly, as he reached his later years, he became known to the public as a modern-day Franklin. With his extraordinary insight and wisdom, he illuminated his and Warren Buffett's financial empire and earned the respect of people worldwide. This concludes the first part of our content, where we primarily discuss Charlie Munger's life experiences. In the upcoming second part, we will explore the key principles that define Charlie Munger's success. Many people wonder how Munger achieved such remarkable accomplishments. In many public appearances, Munger has stated that the fundamental reason lies in his unwavering commitment to a specific set of principles. These principles can be summarized in three key concepts. First, the use of inversion to eliminate what not to do. Second, interdisciplinary thinking to analyze what can be done. And third, the application of full intensity only at the appropriate moment. These three principles may sound simple, but they each hold profound significance. Let's begin by examining the first principle. The use of inversion to eliminate what not to do. To understand this concept better, we must delve into Munger's unique thought process, where he always starts by thinking in reverse. What does this mean? Let's begin with an example from Munger's own life experience. Once, he gave a speech to Harvard University graduates. The assigned topic for the speech was how to attain happiness in life, but Munger's entire talk was about what actions make life unhappy. The reason behind this was Munger's belief that the path to happiness is quite simple. Know what makes your life unhappy and avoid doing those things. In a similar vein, when someone once asked Munger how to achieve success, his response was consistent. Simply avoid disastrous marriages and drugs. Many people who don't understand Munger might think he was joking. However, this was actually one of his most frequently employed modes of thinking, reverse thinking. Reverse thinking means that by avoiding poor decisions and bad outcomes, good things will naturally follow. Throughout his long life, Charlie Munger adhered to the principle of reverse thinking. He continuously collected famous case studies of failures involving individuals, businesses, and government management, and wrote down the causes of these failures. Before making important decisions, he would review these case studies. This habit enabled him to avoid major mistakes in both his personal and professional life, and sometimes even allowed him to foresee future challenges. For example, a long time ago, Munger pondered why human societies cyclically experienced economic crises. After extensive research, he discovered that the reason behind the sudden collapse of thriving industries was the phenomenon of foolish consumption. In simple terms, if unaccounted for money flowed into the market, such as embezzled public funds, it would indeed stimulate short-term consumption growth. The problem was that the public didn't know they were being embezzled. They saw the overall economy growing and assumed their wealth was increasing. However, this was merely a false prosperity. As soon as this unaccounted for money faced issues or was halted, the economy would collapse. Munger noticed that American banks were also playing with fire at the time, offering loans to the less fortunate at extremely low interest rates to buy houses. As more people bought houses, property prices rose. The less fortunate, as well as the banks, believed they were profiting, but it was a classic case of foolish consumption. Sure enough, a few years later, the United States experienced the largest subprime mortgage crisis in history. In Charlie Munger's view, there are two types of things we should avoid: those repeated historical mistakes we discussed earlier, and things outside our circle of competence. To address this, Charlie Munger coined a concept known as the circle of competence. The circle of competence refers to the boundary of a person's abilities. Munger once shared a humorous anecdote about the renowned physicist Max Planck and his chauffeur to illustrate the concept. He used this story to encourage us to consider the idea of a circle of competence. It is said that Planck's chauffeur would frequently accompany him to give lectures and one day suggested switching roles, with the chauffeur delivering the lecture instead. Planck agreed, and the chauffeur flawlessly recited the entire lecture. However, during the Q&A session, a physicist posed a challenging, highly specialized question that the chauffeur couldn't answer. He admitted he couldn't answer such an elementary question and jokingly referred to Planck, his chauffeur, for the answer. Munger's point was that in real life, understanding the boundaries of your own competence is crucial. If you can't competently answer the next question, it means you've ventured beyond your circle of competence. The circle of competence acts as your protective moat, and crossing it can be perilous. Taking Warren Buffett and Charlie Munger as examples, many people might assume that managing investment funds worth billions means they must be incredibly busy. In reality, they invest in only 1 or 2 projects per year. They are cautious because they are aware that if they act beyond their circle of competence, they will eventually be outperformed by those more skilled. Buffett also states that their true skill lies in knowing when they are operating within their circle of competence, and when they are approaching its edge. Only by deeply understanding the boundaries of your abilities can you have the courage to decline seemingly good opportunities. This concludes our discussion of the first principle, using reverse thinking to eliminate what not to do. To avoid repeating the mistakes of others, we must also remind ourselves not to step outside our circle of competence. So, how should we handle matters within our circle of competence? This leads us to the second principle we will discuss next, thinking about what can be done using interdisciplinary thinking. Now, what is interdisciplinary thinking? This concept is also an original idea from Charlie Munger. In most cases, when we solve problems, we employ a traditional mode of thinking called specialization. Specialization assumes that we cannot master all knowledge, so our best approach is to excel in a specific field. For instance, if you are a doctor, you specialize in treating certain types of diseases, and if you are a lawyer, you become well-versed in relevant legal documents. However, according to Munger, this seemingly natural classification method is flawed because in the real world, the connections between various things are incredibly tight and not defined by artificial boundaries. Interdisciplinary thinking advocates that any techniques and methods that are helpful in solving a problem should be integrated and applied together. For example, once Charlie Munger gave a speech at a university, and he asked the high-achieving students below, "How can you increase the price of a product while simultaneously increasing demand?" At that time, many couldn't answer because it contradicted the basic supply and demand principles of economics. Some students did offer some perspectives. For instance, they mentioned luxury goods like jewelry, where increasing the price can stimulate sales because people often associate higher prices with higher quality. This answer was good, but among all the responses, Munger most appreciated the following. One student proposed a solution, suggesting that you could increase the price and give the extra money to the salesperson. This would motivate the salesperson to work harder to promote the product, ultimately increasing sales. Munger appreciated this answer because the respondent didn't approach the economic problem from the perspective of economics. Instead, they used knowledge from psychology and management to propose a solution. In Charlie Munger's eyes, the most critical thing in the real world is not classification but problem solving. Regardless of the discipline, as long as it contributes to solving the same problem, it should be brought together for inspiration. Munger put it this way, and he practiced it as well. For instance, his investment approach differed significantly from that of most investors. He didn't merely assess the financial information of a company independently. Instead, he conducted a comprehensive analysis of the system in which the target company operated. It's only when you apply different disciplines, principles, and methods to solve the same problem that you are more likely to trigger a synergy effect, what Charlie Munger referred to as the Lollapalooza effect, meaning that the combination of multiple ways of thinking can produce greater power. How can we cultivate our interdisciplinary thinking? There are two methods. The first method stems from one of Charlie Munger's speeches, in which he mentioned that his most important intellectual tools come from several key disciplines. These include rigorous logic-based hard sciences like physics and mathematics, as well as practical soft sciences like psychology and economics. We can distill the most important concepts from these disciplines and use them as our mental models. The second method, endorsed by Munger, is learning from the top talents in various fields. For instance, Munger knew a renowned surgeon who never made mistakes during surgeries. His secret was a pre-surgery checklist he created, meticulously going through each item before every operation. Munger adopted a similar approach in his investment decisions by creating an investment checklist and reviewing it before each investment. In real life, many people try to solve all problems using a single mental model. Just as someone with a hammer sees the world as full of nails, we must develop a mindset of interdisciplinary thinking. So, what should we do after gaining clarity on these principles? This brings us to the third principle, going all in at the right time. Munger shared a story about baseball legend Ty Cobb, who achieved a batting average of .400 in a season, a record that still stands today. Cobb's hitting technique involved dividing the strike zone into 77 squares and only swinging when the pitch landed in his best area. Even if he faced the pressure of potentially striking out, he refused to swing at pitches outside his optimal zone. Munger believes we should adopt a similar approach in our decision-making. Most of the time, we might not need to act immediately, just observe. Periodically, we'll recognize a slow but perfectly aligned opportunity, and we should only go all in when that opportunity arises. Regardless of our innate talent, this approach ensures we make a hit when the perfect pitch comes our way. It's about patiently waiting for the right moment, and not swinging too frequently before it arrives. Warren Buffett shares a similar perspective. In one of his lectures at a business school, he told his students, "I could improve your ultimate financial welfare by giving you a ticket with only 20 slots in it, so that you had 20 punches, representing all the investments that you got to make in a lifetime. And once you'd punched through the card, you couldn't make any more investments at all. Under such rules, you'd carefully consider each move and allocate more resources to your chosen investments. This disciplined approach significantly enhances your performance." In fact, as one of the world's premier investors, Munger has long abandoned the frequent trading required in hedge funds. He seldom makes investment moves because he believes it's unnecessary to trade frequently. Placing 90% of your assets into a great company and only acting a few times can create immense wealth. Munger calls this the art of waiting patiently. How can we accurately seize the right moment? There are two training methods to consider: the dual track analysis and the mental flight simulator. Let's start with the dual track analysis. Munger recommends analyzing problems from two perspectives. One is the rational perspective, assessing the factors genuinely driving the interests at stake, such as macroeconomic policies. Integrate various interdisciplinary mental models to calculate the probability of success. The other perspective is emotional. Focus on analyzing the factors that can cloud our judgment when our subconscious mind is at play, such as making hasty decisions under high stress or acting differently due to jealousy. This combination of rational and emotional analysis is the dual track analysis. Most people tend to consider problems from either a rational or an emotional standpoint, rarely both. This method reminds us that any problem may be more complex than we imagine. Now let's discuss the mental flight simulator. This method draws inspiration from pilot training. Flying an aircraft is arguably one of the most demanding fields, where errors are almost intolerable. However, there's a paradox. before a pilot attains a certain skill level, they cannot fly a real aircraft. But without flying a real aircraft, they can never truly develop flying skills. The solution is to use a flight simulator. Pilots spend a significant amount of time in simulators, treating simulator challenges as if they were real, to train their flying abilities. Munger suggests we apply a similar approach to enhance our decision-making skills. In real life, case analysis serves as an excellent simulator. Munger advises us to read journal reports, especially those analyzing complex and intricate events. While reading, we should contemplate how we would handle the situation if we were the decision maker. When to act, what mental tools to use, and other critical aspects should be considered. By consciously employing the dual-track analysis and mental flight simulator in our lives, we become better prepared to go all in when the right opportunity arises. To put it in Warren Buffett's words, "Be fearful when others are greedy and greedy when others are fearful." After careful analysis and preparation, no matter how fearful others may be, we can have the confidence to seize the opportunity. Like Charlie Munger, who had tremendous faith in a local newspaper when everyone else opposed it, patience and wisdom will lead us to success when the right moment comes. In conclusion, today's discussion was based on Charlie Munger's authorized biography, Per Charlie's Almanack. We first explored Charlie Munger's life experiences and discovered that his wealth didn't come from inheritance or unethical activities but from continuous wise investments. This offers valuable insights for ordinary individuals seeking financial success. In the second part, we delved into Charlie Munger's core principles. For most endeavors, he advocates 3 principles. First, employ reverse thinking to eliminate what not to do, ensuring actions remain within one's circle of competence. Second, seek out essential theories from various disciplines and master them to develop interdisciplinary thinking. Finally, use the dual-track analysis and mental flight simulator to train judgment skills and only go all in when the right moment arrives. Lastly, we'd like to emphasize that the source of Charlie Munger's wisdom isn't mysterious at all. If you were to ask someone familiar with Munger why he is so wise, you might receive a common answer: reading. There's a story about a young man who arranged to have breakfast with Munger. Upon arriving promptly, he found Munger already sitting there, having finished reading the morning's newspaper. On the second occasion, the young man arrived half an hour early, only to discover Munger seated there, immersed in a newspaper once again. On the third meeting, the young man arrived an hour early, yet Munger was already there, engrossed in a newspaper. They started reading their papers separately, not disturbing each other, and only had breakfast when the agreed-upon time arrived. Munger carried a book with him nearly everywhere he went, saying, "As long as I have a book, I never feel like I'm wasting time." In today's world, there are more ways than ever to access knowledge, such as through this channel, Wealth Talker, which provides an efficient way to grasp the essence of a book. Each book you understand brings you a step closer to the brilliance of Charlie Munger. Congratulations on completing another book. Thank you for your support and attention. Please subscribe to the channel, like, and share this valuable knowledge with your friends. Let's combine wisdom with action to achieve our financial goals and create a better future. Thank you, and see you in the next episode.